The standard cost is defined as a predetermined cost, which is calculated from the management's standard of efficient operations. There are benchmarks set. In one word, we can say the benchmarks in the cost. Cost related to what? Cost related to the materials, cost related to the labor, cost related to the overheads. Let's have a just glance at the features or the characteristics of standard costing. It's predetermined cost. It's not an estimate, but it is calculated, taking into consideration some valuable inputs from the industry, from the market, and the expert's opinion. It is calculated using the efficiency standards also. It can be used as a base to check whether you are on par with these standards or not. Okay. Then you have problems. I'm just going straight to the problems. All this material you'll be getting. I'm going straight to the problems. Yeah, variances. Variance analysis is part of the standard costing. So variances in what? The variance in material costs, variance in labor costs, variance in overhead cost. You have set a standard and you check the actual performance or actual cost, compare the actual cost with the standard set in materials, in labor, and in overheads. And if there's any difference, it can be positive difference or it can be negative difference. If it is cost, then if your standard cost is more than the actual cost, you're doing very good. You're doing good. But if your actual cost is more than the standard cost, your performance is not up to the mark. You're wasting the resources, maybe material or men or human resources. So in case of cost, if your actual cost is more than the standard cost, you're not doing good. But contrary to that, in case of sales variances, if your standard sales are more than the actual sales, then you're not doing good. Your actual sales should be more than the standard. Then it is favorable situation. If your sales are less than, actual sales are less than the standard sales, then your performance is not up to the mark. The same can be applied in case of profit. Fine. In light of this, we will go to the calculations. Material cost variance. Material cost variance is understood or calculated in three ways. Okay. Material price variance, material usage or quantity variance, then you have material mix variance. Okay. Material mix variance is little advanced, but you can simply understand material price variance, material usage variance put together constitute material cost variance. Okay. Now look at a problem, then we understand it. The formula for material price variance is actual quantity into standard price minus actual price. The difference is taken between standard price and actual price, and it is multiplied with the actual quantity. Then you get material price variance. It is the price variance. It is the price variance. The quantity is actual quantity. When you look at the usage variance or quantity variance, the variance is in quantity. The variance is in quantity. So therefore, standard quantity minus actual quantity gives you the difference of variance. So the variance in standard quantity and actual quantity is multiplied with the standard price. Look at this. Here it is actual quantity. Here it is standard price. Here it is the difference between standard price and actual price. Here it is standard quantity and actual quantity. Okay. Price, in place of price, you're putting quantity. Okay, that's all the difference in the parenthesis in this brackets. But when you look at with what it is multiplied, it was actual quantity in case of material price variance, and it is standard price in case of material quantity variance. Okay, so the total price variance and quantity variance put together gives you cost variance, material cost variance. So therefore, this is the formula. Material cost variance is equal to material price variance plus material quantity variance. Come again, material cost variance is equal to material price variance plus material usage or quantity variance. Don't get confused. Okay. Now let's take a problem and fit that problem in these equations. Calculate material variances from the following details. Standard quantity of materials for producing 1 unit of finished product P is 5 kilograms. The standard price is 6 per kilogram. During a particular period, 500 units of P, were produced. Actual material consumed was 2,700 kilograms at a cost of 16,200. It's a bit confusing, but let me say not difficult. What's the formula for material cost variance? Material cost variance is equal to standard cost of the materials minus actual cost of the materials. Okay, we'll come back to this. First, we'll calculate material price variance. Material price variance is equal to, okay, where is this? Material price variance, actual quantity into standard price minus actual price. Standard price minus actual price. Okay. Material price variance is equal to actual quantity into standard price minus actual price. What is the actual quantity? Actual quantity is 2,700 kilograms. 2,700 kilograms. And what is the standard price? Standard price is 6 per kilogram. Okay. During a particular period, 500 units of P were produced. The actual material consumed, okay, was 2,700 kilograms at a cost of 16,200. So 16,200 by 2,700 gives us again 6. Okay, so standard is 6, actual also is 6. So 2,700 into, okay, standard minus actual is 0. 0 into this is nil. So there is no variance at all. There is no price variance. It is 0. Then coming to material quantity variance, standard price into standard quantity minus actual quantity. Standard quantity was 2,500. Okay, 2,500. Where is that? Yeah, 500, I'm sorry, 500 units into 5 kilogram, 5 piece, yeah, standard quantity of material for producing 1 unit. To produce 1 unit, you need to spend 5 kilograms. How many units you are producing? 500 units. So 500 into 5, 2500 is the standard quantity consumed or used, minus actual material consumed is 2700. So standard quantity minus actual quantity into standard price, which was given as 6 per kilogram. Okay, that is equal to 1200. Now look at this. Which one is this? Is it minus value or is it positive value or negative value? The standard quantity is less than the actual quantity. It is a negative or adverse value. So therefore, this minus value multiplied with the standard price gives a minus 1200, or a negative variance, or in variance analysis, we denote it with A, indicating that it is an adverse. So adverse, 1200 rupees adverse. The material quantity variance is, that means you have spent 1200 more than the standard cost of material. Okay, you have used 1200 worth material much more than the standard, standard set. This is adverse and this is 0. Okay, what is the material cost variance? Material cost variance is equal to materials price variance plus material quantity variance. Material price variance plus material quantity variance. Okay, that is equal to 0 plus 1200, 0 plus adverse 1200. So the net result is adverse 1200. Okay, now let us cross check whether what we have done is correct or not. Now, material cost variance, the other equation is standard cost of materials minus actual cost. Okay, now standard cost of materials is 500 kilograms, okay, of output, and each unit of output is consuming 5 kilograms. Okay, 500 units, each unit is taking 5 kilograms. So 500 into 5 is the standard cost of the materials. Okay, standard cost of the material. And what is the cost of each unit? 6 rupees. So therefore, standard cost of material is equal to 500 units of output, and each unit of output is taking 5 kilograms, and each kilogram of input is costing 6 rupees. So therefore, 6 into 5 into 500 is the standard cost of the materials, minus actually you have spent 16,200. 16,200. Okay, so all this product 2,500 into 6, that comes to 15,000 minus 16,200, which is equal to 1,200. Okay, the 16,500 is a negative value and this is a positive value, and you got 1,200 adverse. Okay, so when you calculated material cost variance using a standard equation, you got 1,200 adverse. When you are reconciling, okay, material cost variance is equal to material price variance plus material quantity variance, right? 0 plus 1,200 also is equal to 1,200 adverse. So this is material variance, basic variances of material. Material cost variance is equal to material price variance plus material cost variance, material price variance, material quantity variance.